Inflation in Nigeria has been climbing since the land borders were closed in August of 2019. Year-on-year inflation for October is at 14.23%, with food inflation over 17%. Now, inflation erodes purchasing power, also eats away at investment returns. How do you hedge against inflation? Our next guest, investment banking analyst Dayo Oduwole, joins me to discuss inflation and, of course, other economic issues in Nigeria, especially how to hedge against it. Dayo, thank you so much for joining us. So I think we've got some slides here to look at. I want to ask you how, of course, Dayo, we can use dividends as a good hedge against inflation. I guess you can walk us through some of these charts here. Okay,
thanks for having me, Rotus. So I think in a high inflation or high inflation environment, I think those that save or those that suffer the most are the savers. And what's important is for those savers to look for a simple way, a sticky way of hedging against a general rise in prices. And after looking at the data and looking for a simple, a relatively sticky, a relatively stable set of cash flows, what I found was that using some form of dividends or dividend contracts does a relatively good job. Looking at the data over a 15-year period, from 2004 to about 2019, what I found was whilst prices rose by about 12% year on year, dividends increased by about a third, so increased by about 30%. So whilst prices are rising by 12%, year-on-year dividends are rising about 31% effectively. So that's why I thought it was a good idea to at least say that you can hedge inflation effectively using dividends and dividend-type contracts.
Fantastic. All right, let's take a look at your next slide here. I think we've got a chart where you say, take us through this inflation and changes in dividends between 2005 and 2019.
Yeah, so if you look at the chart, what you'd observe is that whilst inflation goes up in different leaps and bounds, the dividends that are paid by companies in Nigeria, listed companies in Nigeria, also grow in leaps and bounds and grow in a larger magnitude effectively. So it's not as though they grow and then they decline significantly. No. The dividends that are paid grow on a consistent basis over time. So that's what that slide says effectively, and that has happened over the last 15 years. And I'm sure if you look further back, you'd see the same relationship.
Great stuff. That's very interesting. So it looks like that is they've been heading off inflation. I think we've got another slide here where you continue the analysis, saying that dividends have tracked. Yeah, take us through this. Dividends have tracked GDP in 5 years?
Yes. So something else that one does need to think about is, how does the economy perform relative to how stocks perform? All over the world, from time to time, you do see a bit of a disconnect between the performance of stocks via their prices versus what's actually happening in the economy. But if you look at dividends, and in Nigeria, for example, what I've seen over the last 5 years specifically is when you have a significant growth, the dividends that are paid by companies goes up. But if there is a dip in the economy, then you'd also see a decline in the dividends paid. And it does make sense, right? It's intuitive. If companies are selling a lot more, then they make more profit, and then they can share those profits with their shareholders effectively. And then if there's a decline in their performance, then you'd expect that there'll also be a decline in the profits that they can share with the shareholders. And that's it really. And it's important that for those who are looking, and specifically for the pension fund administrators specifically, they start thinking in terms of how they can effectively hedge inflation relative to other requirements in their job descriptions.
Fantastic. And I think there's another slide where you're talking about dividends. There it is. Dividends dominating inflation in Nigeria. I guess it's the inflation average versus the dividend average that you have on the chart there, yes?
Absolutely. So as I alluded to earlier, so if you look at changes year on year in dividends of the 30 largest companies in Nigeria that are listed today, you would see that the dividends that they've paid out to their shareholders has grown by 30% year on year, effectively on average, over the last 15 years. Inflation has just grown by about 12%. So if you're looking and thinking about how to deal with a reduction in your purchasing power, then perhaps you need to think a bit more about the type of instruments that you acquire or invest in, basically.
Great stuff. So where would one find consistent dividend-paying stocks on the Nigerian stock exchange? Is it through blue chip stocks?
Okay, so I mean, they're the usual suspects, right? So we know the companies that pay dividends regularly. So if you look at the petroleum marketing companies, you look at the FMCG companies, you look at the industrial companies, these companies have set dividend policies where they state that they're going to be paying out X amount in terms of a percentage of the profit year on year, and they tend to stick with it. So whilst on the stock exchange, for example, the price of the stock might go up, go down, go up, go down. With dividends, it don't really work like that. They're sticky, they're easy to predict, and they're easy to understand as well as a concept. So if you're looking to potentially harvest dividends, I think what's easiest to do is perhaps reaching out to a broker or reaching out to someone who's relatively knowledgeable about these matters, and maybe they can somewhat create a contract or create an instrument for you that can help you achieve that.
Okay, great. So you're saying speak to a financial advisor. What about an index? What about using an index to track these things? Okay,
so the indices, so in other markets, you do have those instruments available. So on the GSE, for example, you do have dividend instruments, but in Nigeria, we don't really have that. So the market needs to grow a little bit to that level. But in interim, what for those that are interested, what they can do is reach out to a financial advisor, reach out to a broker who's knowledgeable and can create some sort of a structured instrument for them that can let them harvest the dividends without exposure to the price movements. Price movements are, they add variability into the portfolio. Yeah.
Dayo Oduwole, I wanted us to talk about the economic concepts of Milton Friedman, but we'll have to bring you back for that. We'll have to bring you back. Dayo, thank you for taking us through dividends as a hedge against inflation.